So good morning, my friends and my clients. I'm doing my part to be safe. This is my 4th of July stuff. I'm real patriotic, and I got myself already a patriotic cap as well. But great to be with you guys. Infection rates has continued to rise. Obviously, as we all see together here, what happens in Florida. We've seen some rises as well in other states. We've seen California, for instance, changing the way that they've opened up their state and are retracting again because of a rise of more corona rates, unfortunately. Each time we see these numbers are spiking, we see a right immediate that day kind of response to the stock market. But if I were to summarize the stock market for the last week and a half to 2 weeks, it's been up and down, up and down, up and down, mostly sidewise trading and trying to find direction as where the market is going. Really looking forward to be hosting tomorrow night, and when you actually be receiving this message, it might be Friday, but we'll be hosting and have a recording for you of our State of the Market address that we've done with our Chief Investment Officer. And so we'll put on the bottom of this screen for you a link that you can click on that would be able to move you to a recording of our time together. But that's where we will be discussing in depth what's happened in the markets in the last 6 months and what lies ahead for us. So 32 million people have returned to work from an initial 50 million that were claiming jobless claims in the beginning. So the question is, how long will it take, obviously, for 18 million people to return back to work as their economy is recovering? The stock market is trying to be still 9 months ahead. That's why we see it more positive than what we see in our current economical results. There's a disconnect between trying to figure out when to enter back into the markets. If you're looking at the Q2 economical reports or profit reports from companies, it's not the right spot to look at this point in time because, again, the market is trying to be 9 months ahead, anticipating the economy reopening back. All this to open up an economy back in the last 4 months before we have a re-election. And this is going to create even more volatility. So you're just going to have to hang in there with us. You'll see a lot of volatility, and as we get closer and closer to the due date, we tend to see more volatility. So we're keeping our eyes on what's called the VIX index. The VIX index is a volatility index. At the moment, it's at 29. When we saw the craziness in the end of March, beginning of April, it spiked up as high as 70. So even 70 to 75. So we have much less volatility, but 29 is typically about twice the normal size of volatility. So hang in there, real volatile times. I'm having more and more discussions with folks that have maybe transitioned money out in cash that are looking to be able to move back into the markets. And we're helping a lot of folks with that. And I think it's a real opportune time. Also, if you've gone through this latest volatility and you feel that you were too exposed to downside, really good time to discuss about how we can bring in more safety into your portfolios, more stability into your portfolios, especially if you're about 2 to 3 years away from retiring or you're in your retirement years. So want to just again share with you on the bottom of the screen, there should be a link that you can click on. That would be a great recording of a great conversation with me and Tom Siamanis, our Chief Investment Officer, which is our State of the Market address. Under normal circumstances, we would have hosted you for a great dinner with us here on Sand Lake Road, one of the great restaurants here. Unfortunately, because of Corona, we couldn't do that, but we certainly hope to do that in January with you. So as we navigate to this new time, we will continue to evaluate actions that we need to take in your portfolios. We're happy with what we've innovated in. We're happy with the changes we brought about to be able to make good changes and bring stability for you. We're confident that that is working out very well. Also wanted to let you know about we're developing really good content, and one of our female advisors, Shay Kute, is going to be hosting a webinar on Tuesday night on the 21st, and it's talking a lot around financial issues for women. She's specializing in this area of planning. We're real proud of her to do this webinar, and if you have any ladies that would like to know more about finances or talk more about how it pertains specifically to them, might be even single ladies, highly recommend you pass this video on or make them aware that we will be hosting this webinar. I think you would love the content. I'm going to continue to keep up with you and do these type of videos to stay in contact on a close basis until we through our crises and our pandemics and we're back to normal. So you know, will continue to hear from me. And also, if you would help us, please, if you would go to our Facebook page, that enables us to be able to communicate more content with people, as it obviously increases our platform to communicate. And finally, unfortunately, a lot of folks are being laid off simply because the hospital's just not done well in the last two quarters. And we would love to help people that are laid off. We would love to help people kind of rebuild their financial platforms. And as you know, we have 5 advisors here ready to help. So if you know anybody that has lost their jobs or have to go through that type of pain, keep us in mind. We would really want to see if we can extend a helping hand to folks. So look forward to being with you again next week. Have a great rest of the week. Be safe, and look forward for you to listen to our State of the Market address with me and Tom Siamandis that you'll be able to click on this link at the bottom. Thank you.